I hate to admit this, but if you don't understand macroeconomics right now, you should probably take a break from the charts, and here's exactly why. So over the weekend, the US and Israel launched strikes on Iran's nuclear sites. Trump called it spectacular success. Iran's now threatening to close the Strait of Hormuz, where 1 in 5 barrels of global oil flows through. As an effect, oil spiked 5% before cooling off, but the IMF just warned this could seriously damage global growth if the energy market stays unstable. Airlines like Singapore Airlines and Air France have already cancelled Middle East flights. Aussie markets lost roughly $25 billion and the Australian dollar dropped. This is how fast risk is spreading. Meanwhile, UK PMI is up slightly, but manufacturing still lags. Energy and defense are holding the FTSE up, and the NATO summit kicks off this week with defense spending and US-EU tensions under the spotlight. Now adding to this, the US retail sales were not great, as I mentioned in my last video. So this is what, as a trader, you should be watching right now. If oil breaks $80, looking to go long energy. If Strait of Hormuz closes, gold and defense stocks could rip. If the Fed goes soft, expect the dollar to drop and risk on stocks like tech to catch a bid. If they hint at a rate cut, tech stocks could rally while the dollar loses steam. If Powell sounds dovish, money is likely to move out of the dollar and go into the growth phase like tech. And don't forget PCE inflation and Powell's testimony later this week. That could flip everything again. Comment macro if you struggle with understanding implications of data releases and geopolitics.